Hi guys, this is CA Balakrishna from Lecturepedia.in. Yeah, first of all, happy Raksha Bandhan to all of you. In this video, we will be revising SA 520 Analytical Procedures. Actually, in SA 300 series, we have already touched this analytical procedures. Okay, we have already revised what is meant by analytical procedures in SA 300 series. If you remember, audit procedures will be of two types: test of controls and substantive procedures. Under substantive procedures, we have test of details and substantive analytical procedures. Okay, if you remember, in SA 315 I have given that chart. You can once see that chart. Now in this SA 520, it will deal with the procedure that the auditor will follow in order to use analytical procedure to obtain audit evidence. Okay, basically analytical procedure is one of the audit procedure to obtain audit evidence. If you remember, SA 505 deals with external confirmation, which is one of audit procedure to obtain audit evidence. In the same way, SA 520 deals with analytical procedure, which is one of the audit procedure to obtain audit evidence. Okay, first of all, I'll give one of the small example relating to how this analytical procedure will be performed. Let's say we have an entity. Basically, this entity is in a hotel industry. Okay, it is having some around 100 rooms. Okay, these rooms will be given on rental basis. That is the business of the entity. Now auditor has obtained following information. Auditor has obtained that entity is having in total 100 rooms. Okay, entity is having 100 rooms and average rent from these rooms is 1000. Okay, this is the average rent per room into 365 days, and based on conversation with the management, auditor has obtained the occupancy ratio. Okay, from the management has informed the auditor that on an average the occupancy ratio will be around 70%. Okay, now from this auditor can calculate revenue of the entity. What would be the revenue? Let's calculate. See, 100 rooms, 1000 rupees rent, 365 days, 70% occupancy ratio. 70 divided by 100, that would be 2 crore 55 lakh 50,000. Okay, let's say 2.5 crore. Okay, auditor, based on his analytical procedure, came to a conclusion that the revenue of the entity should be 2.5 crore. But in the financial statements, okay, auditor has observed that entity has shown its revenue as 3 crores. Now there is a difference between expectations of the auditor and the actual figure. Now the auditor will investigate this difference. Okay, why this additional 50 lakhs of revenue has been booked by the entity. Okay, whether entity is providing some other services or whether entity is having any other revenue apart from this rental revenue. Okay, now based on this investigation, auditor will reconcile this difference. Okay, now this analytical procedure will help the auditor to obtain an overall idea. Okay, basically analytical procedures can be used by the auditor at all the stages. Okay, he can use analytical procedures at planning stage, at a performance stage, and at a reporting stage also. This is one of the example of how auditor can use analytical procedures. Now let us see the definition of analytical procedure. What is meant by analytical procedure? Basically, analytical procedure is analysis of plausible relationship among financial and non-financial data. Plausible, what is meant by this plausible? Plausible means you can say it as reasonable. Okay, reasonable or probable. Basically, under analytical procedure, auditor will analyze the probable relationship between financial and non-financial data. Basically, if you observe here, number of rooms. Okay, number of rooms, this is non-financial data. Revenue per room, this is financial data. Occupancy ratio, this is non-financial. Number of days, non-financial. Okay, now based on the relationship between these items, auditor will analyze what should the revenue of the entity has to be. Okay, this is what analytical procedure means. Now basically, under analytical procedure, auditor will compare current year's data with certain three forms of data. Okay, what are those three forms of data? Let us see. It involves comparison of entities' financial information with information for prior period. Let's say there is A Limited. Okay, for A Limited, under current year there will be certain data. Now under analytical procedures, auditor will compare this data with previous year's data of same entity. Okay, this is a first point, information for prior period of the same entity or anticipated results of the entity. Okay, the entity might have projected, okay, its results. It could have prepared its projected financials. Okay, based on the past trend, the entity could have projected what could be its numbers in the future. Now under analytical procedure, auditor can also compare entities current year data with entities projected data. Okay, next. Next comparison involves similar industry information. Okay, now let's say A Limited is under hotel industry. Now in this hotel industry, apart from A Limited, there is another company, B Limited. B Limited could have also prepared its financials in the current year. Okay, it will be having its current year data. Now the auditor of A Limited will compare data of A Limited with data of B Limited. Okay, this is a comparison with a similar industry information. These are the three types of comparisons that the auditor can perform under analytical procedures. Okay, now while performing the analytical procedures, auditor has to follow a certain process. Okay, what is the process that the auditor will follow in order to perform analytical procedures? That we'll see. Basically, this is a very important concept under this SA 520. Process of substantive analytical procedure or how substantive analytical procedures will be performed by the auditor. Basically, it involves 4 steps. What are those 4 steps? First one, auditor will determine suitability, okay, whether performing analytical procedures in this area is suitable or not. This will be first of all determined by the auditor. How the auditor will determine? Based on following factors. Large volume, okay, if the entity's data is large, okay, it has large volume of data, in those cases analytical procedures can be applied by the auditor. Okay, analytical procedures will be more useful to the auditor if the entity is having large volumes of data. And there should be relationship among data. Okay, auditor can use these analytical procedures only if there is relationship between the items that the auditor wants to compare. Okay, electricity units consumed and the electricity bill, there is a relationship between these two items. Okay, entities revenue generated through rental income and total number of rooms and occupancy ratio, there is a relationship between this, thereby auditor can use analytical procedure. Okay, and also number of employees and the salary expense, there is a relationship between this, auditor can use analytical procedure in this area. But let's say total sales made by the entity and number of employees, there is no relationship between these two items. Okay, now auditor cannot compare these two items. Okay, auditor cannot use analytical procedure in this area of sales and employees together. Okay, thereby in order to determine whether analytical procedure is suitable or not, auditor should confirm that there exists a relationship among the data. Hope this is clear. This is the first step, wherein auditor will determine whether performing analytical procedure is suitable or not. Hope this is clear. Once auditor concludes that yes, performing analytical procedures in this area is suitable, then auditor will evaluate reliability of data. If you observe in our example, here to perform analytical procedure, auditor has obtained various data. Okay, number of rooms, average rent, number of days, okay, and this is occupancy ratio. Now auditor should get confidence on the reliability of this data. Okay, only if this data is reliable, then this value will be correct. Okay, if this data is wrong, the amount of revenue that the auditor has calculated will be wrong. Thereby it is necessary that auditor needs to make sure that the data that the auditor is using must be reliable in nature. Okay, now in order to determine whether the data is reliable or not, auditor will consider the following. What are they? Firstly, source of the information. Okay, from whom auditor has gathered this information. Okay, if auditor has gathered this information from the top management, then it will be more reliable. Okay, next, comparability of information, nature and relevance of information, controls over preparation of the information. Okay, auditor will consider all these to determine whether the data that the auditor is using for the purpose of performing analytical procedures is reliable or not. Next, by performing these, auditor came to a conclusion that yes, the data that I am going to use for performing analytical procedures is reliable. Then next, what the auditor will do? Auditor will expect the amount. See, develop an expectation of recorded amounts or ratio. See, with the help of this data, okay, that the auditor has gathered, auditor will expect an amount. Okay, here in this case, auditor is expecting what can be the amount of revenue that the entity would have been generated. Okay, based on auditor's expectation, entity should have generated 2.5 crores. Okay, this is the third step, wherein auditor will expect the amount that has to be there. Okay, in the third step he has expected. What will he do in the fourth step? determine the amount of difference between recorded amount and expected values. See, going to our example again, in the fourth step, auditor will determine the difference between expected value and recorded amount. Here in this case the difference is 50 lakhs. Okay, after determining the difference, he will investigate this difference. Okay, why this difference has arose? How he will investigate? By inquiring with management. Okay, he will inquire with the management. Okay, apart from this rental income, do you have any other income? Okay, in case you have any other income, you please provide the details relating to those incomes. Okay, like this, by performing an inquiry with the management, auditor will try to reconcile the difference, and by performing other audit procedures. Okay, this is how analytical procedures, substantive analytical procedure is performed. See, auditor shall investigate the differences by inquiring with the management and performing other audit procedures. Hope this is clear. By this, revision of SF 520 has been completed. We will meet with SF 530 in the next class.